Welcome. This is the third of a series of savings challenge videos focused on being better disaster prepared and resilient in cost-effective ways using the power of the internet. Each challenge focuses on how to save $500 or more through the use of online sites. The internet is a powerful resource that can help you not only save considerably on nearly every item you buy, but also research the quality of the items you seek so as to get the best quality item for less. This short video focuses on our third challenge, saving on insurance, an important item when it comes to disaster preparedness and resilience. Let's look at multiple strategies for saving on insurance, be it homeowners or auto, which could total $500 or more in savings each year. The first strategy focuses on your coverage, which is based on your level of risk. First, your home. Are you covering the home itself or the land as well? Coverage is only needed for the home as the land will still be there after a disaster occurs. Thus, the cost to rebuild the home on the existing land is likely to be considerably less than the value of the home and the land combined. You're likely familiar with the phrase location, location, location when it comes to buying a house. In some areas, the land can be an expensive part of the overall home cost purchase. So it's important to research the actual cost to rebuild the home. Here's a hypothetical example for a home you purchased for $500,000 in a desirable location. If the home can be rebuilt for $350,000, that means your land and thus your location is worth $150,000 of the total home's value. Since the land doesn't usually need to be replaced, you only need to account for appreciation of the cost to rebuild your home if necessary. Every few years, you should evaluate your home value for assessing correct coverage to ensure you're paying enough for the coverage you need and not overpaying for coverage you don't need. How about your vehicle? Unlike houses that typically appreciate with time, vehicles depreciate with time. Thus, it's important to keep track of depreciation so that you are not overpaying on property coverage. If you total your vehicle in a wreck, you will only get money covering the current value of the vehicle, not that for a brand new vehicle. It's also important to ensure that you are fully protected with respect to liability in case you injure someone with your vehicle, including an occupant in your own vehicle. What you pay for insurance should relate to the level of risk that exists. If you're not in a flood zone, you most likely do not need flood insurance, unless your property sits below surrounding land in which rainwater can drain toward the house. Risk assessment is important for assessing what level of deductible to accept, which is our next strategy. The deductible is the amount you have to pay before you get a dollar from your insurance company. Should you pay more for low deductibles or less for higher deductibles? That can relate to your level of risk. If you live in a hurricane or flood-prone area, it may be better to go with a more expensive, low-deductible policy. However, the average homeowner makes one substantial claim every 10 years on average. Here's an example for a $300,000 house with 3 different premium levels based on selected deductibles. Numbers shown are hypothetical, just provided for example. Shown here is a comparison of total cost to the homeowner over a 10-year period based on 0, 1, and 2 large claims. There is not a lot of difference except greater savings for the higher premium option when there are no claims during the period, especially given the fact that claims can lead to higher premiums, which is not accounted for here. This is seen even more so for 0 or 1 claim during a 30-year period. Note that if you have 2 or more claims, you should probably expect the premium to increase for the same deductible level, which again is not accounted for here. To summarize these findings, lower premium, higher deductible plans almost always do better than higher premium, lower deductible plans. But the savings aren't large, perhaps $100 or $200 annually. Thus, this particular strategy alone may not meet our savings goal. The third strategy deals with the premium itself. Price shopping, even done online, can save considerably more than the other strategies in this video. Here's an example for a $200,000 homeowner's policy in Texas. This image comes from texasquotes.com, a site like many online that can do the work of policy shopping for you, usually at no cost. Note the large difference, ranging from under $1,000 to over $3,000 for the same coverage. One literally could save $1,000 or more by price comparison shopping on premiums. There are a number of price comparison companies like Insure.com, Insurance.com, Insurify.com, and more, which you could find by doing a Google search on something like best insurance comparison sites. In addition to price shopping, one can also compare the quality of the companies too. Does the company you select work well with policyholders when claims are made? You could research this by searching best home insurance or car insurance companies and read customer reviews. Our fourth and final strategy covers discounts. Are you getting all that you're entitled to? A senior citizen discount? Discounts for having a smoke detector or fire extinguisher in the home? Substantial discounts for bundling different policies with the same company, and by paying the entire premium in full rather than monthly. These discounts can add up to 10 to 20% of the premium, thus you could save several $100s annually. Here are some key points that I hope you gained from this short video. Consider your area risk assessment, insured item value and whether they depreciate or appreciate with time, and your financial situation, what you can afford, whether you can afford to pay the entire premium at once or monthly. Lower premiums with higher deductibles are usually better financially, with the exception potentially existing in high-risk areas such as along the Gulf or Atlantic coastlines in hurricane-prone areas. Several strategies were presented focused on coverage, premium comparison, and available discounts, which can combine to save hundreds to well over $1,000 per year on homeowners insurance. Similar results could come from these strategies when applied to auto insurance. Before you finish this video, try this exercise. Go online and find a company that will research insurance premiums for you at no cost and see what they come up for your home or vehicle. Utilize the same coverage levels as you presently have. Are there any companies that offer a total cost annually that is at least $500 less than your current premium? If yes, then research that particular company. You can Google the company's name followed by the word reviews. Are those companies positively reviewed? If no, are there other companies offering similar premium levels but are rated more positively than yours? So did you learn how you could save $500 or more utilizing different strategies on insurance? If not, you are encouraged to review this video again. Ensuring correct coverage, price shopping, and researching discounts can help you achieve this goal each year. It can be worthwhile to make the effort to research different companies, different policy options, and the discounts you may be entitled to. Thank you for watching.